Hello and welcome. I'm David Widmar, co-founder and managing partner of Agricultural Economic Insights, or AEI.ag, joining you for the Ag Forecast Network Question of the Week. Of course, the AFN tool, the Ag Forecast Network, is available to AEI Premium subscribers, and it's the only tool that allows decision makers in agriculture, both producers and agribusiness leaders, to think about uncertainty in a very structured way. We'll talk a little bit about that more in just a second. This week's question of the week is actually a question that got resolved. I'm going to share my score, so I encourage you to go check out your score. But it is around the uncertainty around the Federal Reserve raising interest rates. And as a reminder, we had a question asking if the Federal Reserve would raise interest rates in 2021. Of course, that did not happen, so that question was closed as not occurring. But this week, the Federal Reserve announced they would raise the target fund rate. The upper limit is specifically what we've been following, and that resolved the question as a yes outcome. And let's take a look at the scores here for that question. So as a reminder, the specific question is, what is the probability of the Federal Reserve target rate, specifically the upper limit, being raised above 0.25% on or before June the 30th of 2022. And on the 16th, the Federal Reserve announced it would raise the upper limit to 0.5%. So that range that they're targeting now is 0.25 to 0.50. That's the range they're trying to get that effective funds rate targeted. And of course, in green there in the chart, you can see my forecast going all the way back in January. I left myself a note there in January that I was thinking about something referred to as taper tantrum, the idea that as the Fed gets closer to raising interest rates and tapering the stimulus efforts, that could lead in the Fed to slow down its efforts. And so as we were coming out of that that month of January, it seemed like the stock market was maybe not quite ready, or maybe the economy wasn't quite ready for the Fed to raise rates. So I was hedging my bets a little bit. But of course, by the time we got into late January, early February, it was pretty clear the Fed was telegraphing they were going to making those rates hikes as early as March, and that's exactly what they did. That's exactly how they rolled that out. So in hindsight, of course, there's a lot of learning opportunities for me here. I was below the consensus to get started, and then I joined the consensus, and then there at the last minute, I tried to pull ahead. But in general, when you get started at the back of the pack, it's really hard to kind of get ahead of the pack. I know Brent Gloy, my business partner, he had a really strong forecast for this question. My score here was a percentile rank of 22%, meaning 88% of all the other users in the forecast network scored better than I did. So this is one of those always learning opportunities. So the tagline is you win some, you lose some, but you're always learning. And one of the big always learning lessons here for me is everybody here in the forecast network in the last 45 days or so had a forecast above 60%. And so expectations were that the Fed were very strong or very high. The forecasts were very high that the Fed was going to raise rates by the end of June, and they did that. So a lot of you might be looking at this saying like, wow, I thought I had this question pretty well. I had a 65% forecast or a 70% probability of this happening, but my score is pretty low. Well, everybody had a high forecast, and this percentile rank gives us an idea of how well we did versus everybody else, and so we might not have had nearly as strong of a forecast. So that is that particular question. Of course, I want to remind everybody we have two more interest rate related questions. Of course, we've broken down or tried to break down the interest rate uncertainty into will the Fed raise rates in 2021? They have. And part two is how aggressive will the Fed raise interest rates? Specifically, will that upper limit of the target range be increased above 1.75% on or before January the 1st of 2023. You can see my forecast here. I've been moving that around a little bit, going all the way back to January. So we'll see how that plays out. Of course, the consensus has been turning sharply higher, so I probably need to reevaluate my expectations. We're going to write some articles about the latest Fed expectations from the latest report. So take a look at that content. And then finally, we raised the question of what's the probability of these longer term rates, which actually impact agricultural more significantly than maybe these short term rates. What's the probability of these long term rates, the 10-year treasuries exceeding 3.5% by the beginning of 2021? And of course, I'm a little ahead of the consensus here. So again, check your forecast, check your scores to see how you did in that question. Update your expectations. We'll have new content out next week to help you size up the Fed's latest comments and their latest decisions. And then, of course, think about the implications for the longer term rates as we move ahead and we move through the rest of 2022. As always, conversations like where do you think interest rates are going to head? Those are really good intention questions, but it leads us to not have very insightful conversations. And so as we think about moving forward, what could be the Fed's decisions at their next meeting and how significant of a rate increase might we expect in the coming weeks and months? That's all we have for this week. Join us next week. Again, I'm David with Agricultural Economic Insights. Until next time, stay curious.